Brookings India, and to the development seminar, which are held every fortnight at 4. And we define development very broadly to include all aspects of a country's development. So this is macro, micro, education, health, urbanization. But what distinguishes the seminars, development seminars at Brookings India, is that there is a research basis. What is presented is really a paper, it's a thesis, and therefore there is a piece of research that can be circulated and that is the basis of this seminar. And I'm particularly excited to welcome Sumit, who is an old friend of mine. We are both, academic friends, but our interest, professional interest, goes to household finance. That's an area we are both interested in. Sumit is the Vice Dean of Research in the School of Business at National University of Singapore. And he's one of the very few researchers globally who seems to have access to incredibly good data. And we were amazed when we found out that it's not just the US and India and other regular markets where data is available. I'm extremely envious to know that he also has such data available for China. So Sumit, welcome. The rule of the game is we will have a presentation for an hour and then we will have Q&A. During the Q&A, I will ask you to introduce yourself and then please ask the question. Sumit, take it away.
Thank you very much for having me here. Amazing. So today I'm going to talk about corruption in China. So it's a joint work with my colleague Wenlan Quinn, a friend of mine and co-author Amit Seru, and my student Jian Zhang. 90% of the work is done by Jian. Very hardworking. Actually, even the idea is his. And I will get into that in a few minutes, so he gets all the credit for this work. So let me kind of motivate why am I interested in this topic. I guess not for you guys. Most of you guys actually live in India, almost breathe corruption every day, so you might say, this is nothing new you're telling me. But I was astonished when I was actually looking at some of the estimates from the World Bank that $1 trillion is actually transacted in bribery every year. Now that's not a trivial amount. If you just take the Indian GDP, which is maybe twice that amount, or a little bit more than twice, it's quite a significant amount of money that is being transacted in bribery. There are lots and lots of examples: asset sales during privatization in China, public service provision in Delhi. There's lots of anti-corruption measures and programs all over the world. Abhijit Banerjee has been a big champion of this idea. How can we actually try to control corruption and kind of find ways to stop it? But research itself faces huge empirical challenges in this area. The three things I have listed here: corruption is hard to measure because it's illicit, it's secretive. There are people who will be sitting and they are truly corrupt, and you ask them, are you corrupt, and where is corruption? They say, no, there's no corruption here. So obviously nobody really wants to admit and talk about it. Then attempts to measure it is actually very, very hard. How do you measure truly where corruption is happening? So, and then data itself, okay? And once you actually detect it, these guys then find other ways to hide it, and then you cannot find it. So, it's one of these very hard things to detect. So evidence of corruption is kind of limited. I've been having a new research agenda of my own where I'm going after this issue of corruption, and I have a series of papers looking at the issue of political connectedness. Let me just highlight one paper from here to give you a flavor of how should we try to detect corruption, that rather than the usual way and say, this politician is corrupt or this bureaucrat is corrupt. The corruption is happening at the grassroots level. So we need to detect corruption using data. So I'm going to highlight this paper I have on ATM usage in Turkey. So what we do is we have this huge amount of data in Turkey on all ATM users. So I think about, I know from each bank where you go to your ATM. So then if you look at the ATM withdrawal data, what you should find is some kind of a distribution that depends on the note size. So if there are only 100 rupee notes, you should find people withdrawing 100 or 200 or 300 or 500, and there should be some distribution, okay? But you actually, what we look at, by look at ATM by ATM, and when we look at ATMs near bureaucratic offices and near police stations, that distribution is totally different than every other distribution of other ATMs. And if I look at the same ATMs in the nights, on weekends, that distribution mimics the distribution of every other ATM in the city. But during the working days, that ATM withdrawal distribution looks like the corruption menu of that office. So literally I can back out the corruption menu of the political office or the bureaucratic office. If it's a police station, this is how it works. Now the reason I stumbled on this idea is because once I was visiting India and I had to go to a police station, and he said, okay, you have to give me this money, and I said, I don't have it. He said, you know what, go to this ATM and you can withdraw exactly the amount I need. And I went to the ATM, brought it and gave it to him. So then I realized, wow, this must be the case. There is these guys, they know exactly where the ATMs are. They just direct you to that ATM, you withdraw the money and you hand it over. So literally you can look at ATM data and then back out corruption at this location. Okay, so there are lots of examples. Within China, you can actually see lots of studies being done now trying to detect corruption. China is important also for corruption because, you know, it ranks around 80th on corruption, whereas on growth, it's ranking around 2nd or 3rd. So there is a dichotomy. It's like a highly growth economy, but corruption is very high in that economy. So what is going on? More so that the Chinese government is like really embarking on these anti-corruption measures, like literally clamping down. I know this example because I live in Singapore and I have lots of good friends who work at the airport, and they tell me their sales are way down. Because Maotao, which is their national drink, they used to buy from the Singapore airport and take it to China and actually give it as gifts to all the bureaucrats. Now you can't actually do that. So the sales of all liquor that is exported to China is like really killed. So you know that measure of anti-corruption measures in China are actually working. Then you actually look at these, you know, these cases where they actually find these big politicians or big bureaucrats getting caught having corruption money. But that's not the real corruption in most of the places. The real corruption is that every bureaucrat is actually siphoning off some little money. The existing literature within China goes through various layers of detecting corruption, underpricing the sales of the assets, asset sales of the government, measuring corruption by entertainment and travel expenses. There are also these price discounts received by bureaucrats in Chinese housing markets. So our study most closely mimics the last study, but that's the closest we come in and showing what is happening in corruption here. So what I'm going to talk about is document this, what we call as disguised form of corruption through the banking channel in the form of provision of consumer credit. Okay, so we're going to use a fairly nice data set to look at it. And we're going to show you that banks will extend over-generous lines of credit to the bureaucrats. What then the bureaucrats will do essentially is go shopping. And the bureaucrats will shop and buy a lot of things, and they will then become delinquent on their lines of credit. Then the bank will say, okay, you're delinquent, don't worry, I'm just going to make you current. Instead of charging it off and making the bureaucrat pay for it in terms of either direct cost or indirect cost for future access, they actually let it go and make the bureaucrat current. What the bureaucrat does in response is literally takes government money and puts it in the branch and gives the branch officer in a way quid pro quo, because the branch officer gave him all these lines of credit and used to go out and spend this money. Now they just give him back some by putting in government money at cheap interest rates. So we'll kind of establish this quid pro quo, that you get something, in return the bank also gets something. Okay? I'll try to rule out alternative hypotheses if you have some in mind, and if you have questions you can ask, or we can wait till the end and you can have all the questions there.
I have a clarification.
Yes.
So it's not that the bank manager is creating, the bank as a whole is getting access to loans from the government because they are basically benefiting individual bureaucrats.
Here what I have more in mind is the local manager benefits. And this is exactly the slide I have to that. Why corruption occurs? Because the local bureaucrat actually controls all openings of new branches within the region. So the local branch manager has every incentive to make sure that that bureaucrat is happy, so that in return he allows him and gives him the permit when he wants to open the thing. Second is this deposits of all local governments are stashed in branches. And imagine there are branches of 5 different banks. The bureaucrat is to decide where he puts it, and literally if he gets a favor from one bank, he will put the deposits there. Also, there are state-owned enterprises which are clients of the bank, and they actually there could be a quid pro quo. And finally, there could be personal benefits for the branch manager, because eventually he may want to climb the party ladder and want to become a bureaucrat himself. So helping the bureaucrat is actually a good thing for him. So there could be multiple reasons. I'm not going to document evidence showing of all of these things. Why this happens, I'm going to only document that there is this deposits that are siphoned off of the government money into the branch. Okay. So it's not necessarily the CEO of the bank who knows this or is actually pushing for it. It may be the CEO doesn't know it, or he may know it. But the branch manager actually is the guy who's pushing this idea and benefiting from this. Okay. So just to kind of give you a background, why are we going to look at credit cards? So credit card market in China has grown quite a lot. I mean, it was around 343 million total lines of credit were extended. Actually, people had it, and $3.66 trillion of lines of credit are extended. Now, just to give you a sense of where this lies in terms of America, American credit card market has been there for last 50 some years, and their total lines of credit extended is around 1 trillion. So this is around 0.7 trillion. So within the last 20 years, China has almost caught up to the American access to lines of credit as in America. So it's growing very, very fast. So we have this data from one of the banks. It's a pretty large bank, and we're going to look at what is happening. Now the access to credit or access to credit cards in China is much more stringent. Not like the US, it's more like India. In India, I remember when I used to be at ISB, I was trying to get a credit card, and I thought it'll be like US, I'll apply and one day I'll get it in mail. Actually, the guy came to me, he needed verification of my income, my job, everything. So they really do very good due diligence when they give lines of credit in China and India. They ask you many questions. Okay. So the first thing that when we were working on this paper is like, is this story even believable? Now the story I'm trying to tell you is the bank wants to create corruption, and I mean simply you can think about this. These are the guys who are bureaucrats, and these are the common people in the bank's portfolio. And what the bank does is goes out and gives you guys money, an additional line of credit related to these guys. Why would the bank do that? Why isn't the bank just carrying a lot of cash in their office? When you guys come to get credit, they just give you like $50,000 extra. Just say, go home. This is like free money. Do whatever you like with it. Instead of going through this very cumbersome way of extending extra lines of credit, then you have to default on it, then I have to reinstate it, then you will have to do me a favor. It sounds very convoluted. But while we were working on this paper, we actually found this story of this very old Spanish bank. It's called Caja Madrid. Between 2003 and 2012, it gave these lines of credit on credit cards to 68 politicians and bureaucrats. Just for these 68 officials, the total amount of extra line of credit they extended to them was 15 million euros, just for 68 guys. Okay? And what was happening? These guys were actually defaulting on them, and then the bank was making them current. So exactly the mechanism I'm telling you was happening in a bank in Spain that got caught. Interestingly, this bank was also the largest beneficiary of this $40 billion EU bailout. So clearly there was some quid pro quo happening in this scenario. Okay. So how are we going to contribute to this literature on corruption, which most of you have heard the story of corruption is there in China and India. I'm not only going to show you there is corruption, I'm going to show you corruption by a new mechanism, extending credit by the banking system. Not only that, I'm also going to tell you how a regulator can go catch it. It's not one of those stories, yeah, corruption happens, you caught it, you're done. I'm going to tell you how a regulator can now go to every bank and tell them, I need to save all your lending books I need to see who you give this credit to, and then I can detect if your bank practices are corrupt or not. So it's not just a paper about corruption, it's a paper to how to show and detect corruption and catch corruption across the banking system. Okay? So it's not just one paper, it's one mechanism. So this will be the first, essentially, the paper to use consumer credit to use to and use it to detect corruption in China. The data is fairly unique. We got this data from one of the largest banks. It's a kind of interesting story. Many years ago, I had met one of the big senior officials of the bank, and he wanted me to do some analysis of their bank data. So he had given me this data for the bank. And I quickly looked at the data and realized it's in Chinese, and I can't do anything with the data. So it just sat in my desk for around 5-6 years. And then I moved to NUS, and as soon as I moved to NUS, I was talking to my student, Jian Zhang, and I gave him the data, and he said, okay, let me go figure out what we can do with it. In 2-3 days, he came back and he told me, look, there is a discrepancy in the line of credit that is being given to the bureaucrats and non-bureaucrats. So the kernel of the idea came from his initial digging of the data, and then we kept pushing the data and pushing the data to see what else you can say. So essentially, a lot of the things were detected by him in understanding what happened. So the data is kind of old. It comes from 2003 to 2005. While it's old, I have a data set from a bank recently, from 2013 to 2015, and I can show you exactly the same pattern of a different bank using the same mechanism, even today, which means they're doing it. Now, why am I not using that data? Why am I showing you something from a very old data set? Because the guy who was giving me the data, he was an employee of the bank, and clearly he'll get fired if you use the data from his bank. So we're going to use a slightly older data set. The data is fairly rich because I know everything that's on your monthly statement. So imagine your credit card statement that you get every month. I know everything that is on the statement for these 2 years. I also know a rich set of demographics. I know their age, income, gender, marital status, occupation, which is a key variable for us because that helps us determine if you're a bureaucrat versus non-bureaucrat, education, and other variables. So
how do you know who are bureaucrats and who aren't again?
It's in the data.
Okay.
So it tells you clearly that this guy works for this ministry, this guy doesn't work for, he works for a private sector. So clearly the data allows us based on the occupation. Okay. So also we have, this is a large sample. We have the data set for around 1 million people. So it's not like some tiny data of a few people. It also is pretty comprehensive because the data covers all the 31 provinces in China. It has all the debit and credit card accounts. I actually have their other loans, which I'm going to come at the very end, because my argument is not just credit card that do it, they actually do it across the consumer credit spectrum. When they give you a mortgage loan and an auto loan, they do the same thing in terms of giving you higher lines of credit. So I'm going to skip this slide. Typically I put this slide so that I can convince my dean that I actually do know some statistics, and I have got some right education, so I know some of these symbols. So the point of the slide is that we'll run some simple regressions. I am again a guy who does pedantic economics, so that's what I'll kind of focus on. Let me give you some summary statistics so that actually you believe the story before I show you regression results. So I really don't know what he's doing. He could be manipulating the results by running regressions. I want to show you in very simple raw data what is happening. This is the raw data of these guys, of the bureaucrats and the non-bureaucrats. And I'm telling you what is their relationship, sophistication, age, income, number of females across those two groups. They are fairly similar. Okay. What is key is the line of credit that they're extending to the bureaucrats is around 15% higher. Okay? The delinquency rate is around 40% higher. The reinstatement rate, this is when the bank says, you know what, I'm just going to make you current. You were bad, you were delinquent, I'm just going to make you current again. That is higher for the bureaucrat. And the time to reinstatement is longer for the bureaucrat. So I'll come back to this time to reinstatement. It's an important feature of the data for China.
What is time to reinstate?
How long, how many months it takes them to reinstate. Okay? So I just want to make sure that I am using this and these people I'm comparing. So essentially the thought experiment is the following. I'm going to take a person from the bureaucratic branch and a person who is a non-bureaucrat, and I'm going to compare them. Before I start running my thought experiment and see does the bureaucrat get higher lines of credit or not, I want to make sure they're similar in every other way. Okay? So what I've done here in the data is I'm going to make sure they're similar in number of cards, sophistication, age, income. Now you may say, okay, on the mean they look like similar, but they may not be similar for the entire distribution. So I'm going to convince you that they're actually similar in the entire distribution. If I look at the distribution of income or age, I have actually a guy who matches exactly a guy who's a bureaucrat at every age distribution. So it's not just a match on the mean, and otherwise they may not match, so the exercise is not that clean. So at age or income, they match for the entire distribution. Actually, across all my variables, I'm going to match them precisely. Here's the first regression which I'm running. So the key variable, any coefficient you see, these are all very simple regressions that we are running. All coefficients, you can just interpret them as essentially the effect. What do I mean by that? What I'm saying is a bureaucrat is gets a 17% higher line of credit than a non-bureaucrat at this bank. If I control for everything, it's still 14% higher. So a bureaucrat gets around 14% more credit from this bank than a non-bureaucrat. That's the key message after showing that I have control for everything that could be the differences between their two abilities. Okay. Now again, here I've shown you the mean result. You might say, okay, all of this result is coming from Beijing and Shanghai, and the Shanghai and Beijing bureaucrats are actually more powerful, more important, so the bank actually caters to them, so you have not really shown me much. I'm telling you that this effect is for the entire country. Okay? This effect of giving higher lines of credit is not only concentrated in 2 or 3 of the large cities, but it's coming from every part of every city or every province. Okay? So it's not some mean effect of 17 or 14% coming from 2 places. Not only that, the effect is coming at every income distribution. So what I'm saying is, as the income goes up, the line of credit that they give, the higher line of credit they give to the bureaucrat actually goes up. So it's not that it's like, they are giving it to the mean guy. What I'm saying is that the higher income bureaucrat gets a much higher line of credit than a higher income non-bureaucrat. Versus the lower income bureaucrat gets a smaller line of premium in line of credit than a lower income non-bureaucrat. So essentially what the bank is doing is catering to the more powerful, more higher income bureaucrat than to the average bureaucrat. So the bank has a strategy. It's not they're just throwing darts that every bureaucrat who walks into the bank and they say, oh, you're a bureaucrat, I should give you a higher line. No, that's not the strategy. They actually know what they want out of the bureaucrat at the end of the day. Okay. Here is the regression on showing what is happening to delinquency and reinstatement. What this says is that the delinquency is at least 40% higher. If I control for other things, it can be actually 100% higher of the bureaucrat than the non-bureaucrat. So bureaucrats default at a much higher rate than the non-bureaucrats. The bank is more likely to reinstate them or to make them current again at 4% higher rate. Now this time to reinstatement is interesting. So just so you have the frame of reference correctly, what am I trying to get at? What happens in China, which is not exactly what happens in India. So in India what happens is, you get a line of credit, you go out and spend 1,000 rupees on your credit card, then you pay the bank say 950 rupees. Okay? So what the bank will do next month is charge you interest on that 50 rupees. Okay? That's how banking should work. In China, if you take out a line of credit of 1,000 rupees and you pay them 950 back, you get charged interest on the whole 1,000.
that's it for India.
Oh, isn't it India?
That's for everywhere.
But not in the US. In the US, you get charged on the residual, which is the unpaid.
That was changed, I think, 15 years back. That was
Here.
true in the US. That was true in the US.
Oh, even before that. That I don't know. So in the US, where I've been working, I've never seen this. So I was like very amazed that in India, if you're telling me which is the craziest way, I mean, Raghu should be doing something about that as a first order issue to make sure that they don't charge you interest on something that you've already paid back the bank for. Okay. So in China, that's what they do, which is appalling to me. That I paid back the money and I'm still being penalized for that. Okay. So what does that mean? So the optimal strategy for any person should be that even when you're current, you should just pay off the bank ASAP. Because you're being charged interest on the entire amount.
I think in India it is the balance that you haven't paid. You're not paying interest on what you paid. It's the balance
It's on the entire amount. It's on, even if you default the 1 rupee, you pay 999 out of 1,000, you'll be charged interest for the entire amount. That's in the state, I mean, in the agreement, the banking agreement for the credit.
So either you pay everything
Or pay nothing.
or don't pay anything. Now we understand Vijay Mallya's strategy. Okay, fine.
Actually, he's correct. Actually, I know this statistics because I presented this before and somebody reminded me that this is true in most places except America. Actually, this is correct. Your statement is correct. It's only in America they don't make you pay for the big balance you already paid to the bank, which is, I think, more sensible in my mind.
That's actually new because there was an antitrust case against all these banks which was then settled.
Okay. So the point I'm making here is that the banks, the borrower strategy is to pay the bank ASAP. Here you actually see that the customer, which is the bureaucrat, is delaying more and more. Okay? So it's taking a longer time for the bank to reinstate that. Clearly the bureaucrat has no incentive. He's just saying, I'm never paying you back. Okay? So that's why it's taking this reinstatement time takes longer. This is also indicative that it's the bank that is trying to resettle this thing, not the borrower. If the borrower is trying to do it, he'll just come back in a month and do it. Especially if you believe the borrowers are, these bureaucrats are richer and they have corruption money coming from somewhere else, they should settle their credit card ASAP. Okay. So then the next question we try to ask is, which bureaucrat should you try to grab? I mean, it's not that you should just randomly pick all bureaucrats and start giving them money. You should start to pick the right bureaucrats. So what we show is we order these bureaucrats into high-ranked bureaucrats and low-ranked bureaucrats, and you actually see that the line of credit for high-ranked bureaucrats is 26% higher, relative to the low-ranked bureaucrats is only 8% higher. The delinquency rate is 138% higher for the high-ranking bureaucrats. The reinstatement is 14% higher, and obviously the months to reinstatement takes much longer, around 1.2 months. Okay.
Yeah, so when you say reinstatement, you mean their entire credit default history is in white.
Exactly.
So they
start fresh. Okay.
But if they feel that the low rank is of no use, then why are they lending?
No, it's not no use. Clearly, some of them will become useful in the future. So you don't want to see zero here. That's what you have in mind. But you actually do care about bribing them a little bit, because one day they will become seniors. Okay. Now, the other question is, who is really useless? It's this guy, retiring high rank guy. Okay. This is the guy who's about to retire, and you really don't care about him because he cannot help you. You can see that coefficient is just 0. Okay, it's actually negative. Okay, so that's the guy the bank realizes he's about to retire, he's of no use for me, then let's forget about him. And so it's the non-retiring high rank guy who's getting all of the benefit, not the retiring high rank guy. And you do cater for the low ranking guy. Eventually he'll be useful.
Isn't it like the actuarial kind of risk profiling in the sense that people who are towards the back end of the risk mountain, when you're trying to put a number to the life expectancy, then you will charge a higher premium to them for their life insurance or selling them any kind of life insurance. The same probably is maybe when you link it up with the incomes of the bureaucrats, you'll probably find, depending upon how the circumstances are in India, the private sector job uncertainty rate or the churn rate is probably much higher as opposed to the churn rate in the public sector, the bureaucrats. Generally. So you will probably want to extend them a higher line of credit throughout their tenure or life span of their the earnings. And as soon as they're out of their tunnel of their earnings, then you kind of rescind the entire additional benefits that you have.
So let me just rephrase your question because this is an important question. His argument is that, the bank, what you're telling me, the bank is not actually bribing. The bank knows that the income is higher of this guy. Okay?
At least consistent.
No, just to be clear, I want to clarify your argument. The argument is not only because I'm already controlling for income. Okay, so it's not the income that I'm worried about. You're worried about that the bank knows he's a bureaucrat, he has corruption income, and so they account for that corruption income, and that's why they give them a higher line of credit. That's what you're saying. Okay, so what I'm showing you is not that they get higher lines of credit because of corruption. It's just the bank knows that they are more wealthy and more prone to having higher income, so I should give them higher lines of credit. The problem with that argument is they shouldn't default more. Okay, if you believe that they are higher income, why are they defaulting more? Because you just told me they're more stable. Unless this private sector guy whose income is volatile, he could be fired tomorrow, and so the bank endogenizes that fact and says, I'm not going to give you a line of credit. The fact that default mode is inconsistent. But I'm also going to take your argument very seriously later on and show you some other evidence that it's not because of this hidden income that the bureaucrats may have, and that's why they get higher lines of credit. But I hope I've answered your question to some extent. Okay? So clearly what you're seeing is that the bank is going after a certain type of bureaucrat, not all bureaucrats. Then what this shows is it's not that this distribution of delinquency is not only coming from certain lines of credit, it's coming from the entire distribution. Now this is also key because sometimes when you look at these coefficients from a regression and then you say, oh, this is interesting, but a lot of the thing gets hidden in these regressions because it may only be coming from the mean, and I'm telling you it comes from the entire distribution of lines of credit that they give higher to the bureaucrats. Okay? So all bureaucrats through the entire distribution, through the entire country, geographical distribution and lines of credit and actually income distribution, this one, they default. Okay? So this is key that the bureaucrats all over, when they get this line of credit, they go out and say, I'm going to just default.
I have a question. It's possible that bureaucrats, because they have a secure income stream, they are just more credit worthy than your average borrower.
Okay.
Could that be picking up something?
I'm going to show you evidence that's not the case.
Okay.
So once we did this, we thought, let's see if we can find some external validation of our measure of corruption, essentially. So there is this well-established data set in China that actually says when the cities that have government inefficiency or high travel budgets of the bureaucrats or high entertainment budgets, those cities have higher corruption. Okay? So what we did is we interacted our bureaucratic definition, which is these guys who get higher lines of credit, okay, these bureaucrats, and then we see, do these bureaucrats who are living in cities with high inefficiency, high travel budget, high entertainment budget, high conference budget, do they also get higher lines of credit? Are they more likely to be delinquent? Are they more likely to be reinstated? And you see the same evidence looking at a different instrument. So essentially, bureaucrats who live in higher cities with higher travel budget, higher entertainment budget are actually the guys who get more of these privileges from the bank branch. So next thing is there a quid pro quo? So far I've established what is the bank doing, but do the bureaucrats then essentially do something in return? What this shows is that the bureaucrats who are living, who are getting higher lines of credit from the branch, in those branches, they are more likely to deposit the government funds by 69%. So the increased deposit of funds, government funds in those branches is around 69%. So that's a huge effect. Essentially, this branch benefits significantly by giving small lines of credit to these bureaucrats because they just take a bunch of government money and just put it there. Okay. I can break this down to high-ranking and low-ranking bureaucrats, and the coefficient of the high-ranking bureaucrat is 3.1, which is 300%. So when they give these higher lines of credit to high-ranking bureaucrats, they in return take the government money and put it 3 times more than they put it in other branches. Okay?
By
Yes.
other branches, what do you do?
Branches of other banks.
So you have that data?
Yes. Okay. Now, all I showed you here is correlation. Okay. I'm saying there are these government branches, and there is this deposit. There's bureaucrats, and there's deposits. And it could be that because the data set is very tiny, I only have 74 observations because it's at the city level. So I don't know, is the money coming first or are they getting the bribe first? So then I look at the same thing in terms of change. When the bureaucrat gets the line of credit, what is happening to the deposits next year? I'm doing this because I only have this data in annual frequency. So within the change itself, I can show you it's 5% increase. Lines of these government deposits go to that branch. So now it's causal. It's no more that, it's not just a correlation. I'm saying banks, these bureaucrats go out and they put in more money in those branches by an additional 5% year over year.
The R squared is the R squared?
Too small or too big?
Yeah, so R squared is too small.
It's too small.
That variable in that this particular set that you have. Only 0.39 is 39% is
Explain.
Yeah.
No, clearly. I mean, this is a regression that is being run at such an aggregate level. There is no way I can capture everything by those two variables. I mean, the reason this R square is so high is because of these two fixed effects. If I remove them, then the R square will be like 0.02 or something. Okay? I mean, if I could explain the government deposits purely just by bureaucrat corruption, I mean, that would be I wouldn't need to write a paper. Okay. So far I've established two things. One, that the bank does something for the bureaucrats. And then I've kind of shown you that in return the bureaucrat goes out and does something for the bank. So I've established quid pro quo. So you might say, fine, there was corruption, but who cares? Who cares, because as long as nobody else in the economy is being hurt, then it's not that important. Okay? Let's imagine that he and I have a deal and I am the bank and I am corrupt and I actually make you corrupt, but nobody else loses, then it may not be that bad of a deal. Okay? But next I want to show you that actually it's detrimental to the rest of the society. So now what I'm doing is I'm looking at the high bureaucrat, the cities where there is higher corruption and cities where there is lower corruption, bureaucratic corruption, and then I'm going to look at the line of credit given to non-bureaucrats in those two cities. Okay? So the idea is that if there is this zero-sum game, that if I just give the money to the bureaucrat and I don't cut down the line of credit to the non-bureaucrats, then the non-bureaucrats in the two cities should get equal access to credit, and then I don't care. And what I'm showing you here is that the line of credit to the average guy in the high corrupt cities is 15,900, in the non-corrupt cities is 20,000. So that's around 25% differential. So essentially, there is a siphoning off the money that could have gone to the non-bureaucrat who could have started a small business or actually used it for consumption. Now that ended up going to the bureaucrat, and that is detrimental to the GDP or economic growth of that region. Okay. So controlling for everything, what I've shown you that there's bureaucrats, actually non-bureaucrats in these cities end up getting a worse deal. Now this is just some of these statistics. I can run a bunch of regressions and I can show you the same result. That is the non-bureaucrats who actually end up suffering because of this activity by the bank. Now, I'm an academic. Most of the people will tell me when I do this exercise and present this result, this is like people like Shamika who have been so used to running these randomized controlled trials, and you guys have totally destroyed the world for me at least. That I don't believe anything unless there is a clean experiment. So then I was trying to see if I can find one of those experiment things. So what happened in the year that we happen to have this data that government also cracked down. In 22 cities, they were cracking down. In 15 of the provinces, they were cracking down. So I'm going to then go out and start showing you that before the crackdown and before and after the crackdown, what is happening to the line of credit to the bureaucrats. So these are the bureaucrats who are living in provinces not being under the crackdown. These are the bureaucrats who are in the cities that are under crackdown. So this is after the crackdown. So this is like, in a way, what she would call as diff and diff. So I'm going to show you very clearly the bureaucrats who were taking lines of credit after the crackdown, compare them to the bureaucrats who are living in cities before, who are not being under the crackdown, and also bureaucrats in the cities who are getting credit after the crackdown versus before the
So
crackdown.
could you tell us briefly what these crackdowns are?
Essentially what was happening last year or 2 years ago in China, every few years they do a cleaning of the house. A new premier comes in and he says, like what also happens in India, the Congress comes in and says, okay, you guys BJP, you had all your cronies, you made a lot of money, now we need to clean house, get rid of all your guys so our guys can take the money now going forward. So then the new premier came in and he said, okay, we need to crack down in these states, let's get rid of all your guys and then we can start the corruption machinery again. So essentially that's what the government was doing.
So it's a regime change?
Yes.
Okay.
So this is what...
One clarification.
Yes.
As far as the crackdown you're talking about is concerned, especially in this present regime, we hear and we read about the crackdown which is actually going within the party. What do you have to say about that? Because your explanation.
Yes. I'm not sure that is entirely true with what is happening in China. There's only one party, okay? There's not multiple parties in China. But it's the regime change, which is the leadership who comes in, and there are a lot of fractions within the same party among the leadership. So the old leadership went out, and this is why you see the guy who is the head of Alibaba. He's very nervous because he's aligned with the old party, because his wife is actually the granddaughter of the old party leader's boss. And now the new party leader doesn't like this guy. Okay. Essentially, he says the deal you made with him is no good, I need a different deal. Which means the money, you were giving him say 10%, I need 20%. So the argument, I'm not quite sure. I mean, I've talked to many of these government officials from China who come to Singapore quite often. And luckily when they drink a couple of drinks, they're more freely able to talk and tell you some of the inside stories, what happens.
Can we go back to the previous slide? One before this. Yeah, did you control for GDP per capita for every city per se? Because there might be an argument to make that cities with high corruption also have lower GDP per capita, which is why credit lines are lower.
We'll get into that in a few minutes. But essentially here we are controlling for pretty much everything in the data. I'm not only controlling for the city, I'm actually controlling for the individual in most of these regressions. So that essentially controls for the city. So I'm actually doing much more than a city control in these regressions. Okay, these numbers are just simple summary stats, but we control for everything we can. Okay. So here is the natural experiment. So here you can even think about we're controlling for city times origination fixed effects. So much stricter fixed effects. So what you see is that the bureaucrats, after the crackdown, the line of credit drops by 14% on average. So essentially their line of credit is similar to the average guy. So the entire corruption mechanism is gone because of this crackdown. Delinquency rates drop by 53%. So you have to subtract from 60%, so there's only 7% additional delinquency. Statistically, that's not significantly different from zero, so essentially delinquencies goes away, restatements go away, time to restatement goes away, everything goes away. All my results essentially go away when the crackdowns happen. Okay. Not only that, the government deposits, the quid pro quo also goes away. So after the crackdown, what is happening is this coefficient drops by 0.7%, it used to be 1.2. So essentially the bureaucrats are also now not putting the money back into the banks, into these bank branches. So to me, if you don't buy my previous results, this is much cleaner but obviously the data set shrinks and it's not generalizable. When what most macroeconomists will say, okay, you did this in some little thing, I don't really believe it. So I've shown you the results both ways, both in a more general setting and actually try to create identification using this crackdown and show the same results. So typically, by the time I have presented this paper up till now, then most people will say, okay, so you have shown me all of this. This is peanut economics. Who cares? These are just credit cards. What is the big issue? Is this really economically important for China? And are you telling me that this is an important way to measure or detect corruption for the country? So we obviously we can only do some back of the envelope calculation to show the total number of customers who are bureaucrats at this bank, the total amount of bribery that was given out. If I believe this is happening in all the branches, all the banks, then what do I get? I get around 3.2% of the corruption can be explained by that measure. Now, this is only credit cards, okay? Now, if I can generalize this to other credit, mortgages, auto, and other things, I can get that number to around 11 or 12%, okay? Now, you may argue 11 or 12% is that important or not, but I believe if I can capture in a systematic way of 11% of the corruption in China, not only catch it, but actually help the regulators detect it going forward to catch for all these banks, I think that's a significant step forward in detecting or eradicating, say, 11% of the corruption. Obviously, I can't eliminate all the corruption, but this will go a long way in that direction. So here's some evidence of other loan products of what is happening in China. So we have this data on mortgages and auto loans. And we find very, very similar evidence of delinquency rates for bureaucrats versus non-bureaucrats. The bureaucratic delinquency rate is around 60-70% higher than the non-bureaucratic delinquency rate. The collateral they post is lower, the house values are higher, and the loan amount is higher. So across the band, what you see is that the bank not only does this for credit cards, where we have very high quality data, because here remember the data set is only 4,000. We have 1 million customers on their credit cards, we can actually do a much cleaner, better exercise. But the evidence is very, very similar of what the bank is doing. And you can see performance in a regression framework. You can see the same results of what happens at this bank. So now let's try to answer some of the questions maybe that Shamika was asking and you were asking earlier. Should I really believe this result? Maybe it's because of some other factors that could be happening. First could be that, is this average delinquency outcome the same as the marginal delinquency outcome? So I'm going to show you that here is the thought experiment I was trying to do. What I did is I took the average income of the bureaucrat and matched it to the average income of the non-bureaucrat. So essentially I take two guys, I matched their income and I said, okay, look at the guy who is the bureaucrat, he gets a 13% higher line of credit and he defaults. So what I'm trying to now do is, what should be the income of the non-bureaucrat for him to get the same line of credit? Okay? How much higher will the non-bureaucrat have to make for him to get the same? So let me just show you this in a very graphical sense. So essentially, these are just different data points. The non-bureaucrat will have to make almost twice the income around here, 0.9% the income, for him to get the same line of credit. Okay? So now you have to believe that the bank thinks that the corruption money of the bureaucrat is twice. That's why he's giving that line of credit to him, the additional line of credit. Okay? That his true income, that is documented income, is half, and another half comes from this corruption, and that's why I should give him higher lines of credit. But we are matching on all of this. And the delinquency results kind of go the opposite direction. The reinstatement results go in the opposite direction. Then I've shown you evidence about, the quid pro quo. So it's very hard for me to believe that the bank actually goes out of its way and says, we'll give you higher line of credit because we think there is hidden income. That hidden income number has to be so high for the bank to be convinced. Okay. The second issue is that the credit worthiness of these guys may be higher. It's not just this undocumented income is higher, that the bank believes that these guys are more credit worthy, and so I'm going to give them higher lines of credit. Still, that argument is not right because the delinquency rates are higher. Okay, but luckily in our data we have one city, Shanghai, where there was a credit bureau at that time. So if there is a credit bureau, then this credit worthiness argument goes away, or should go away, because then from the credit bureau they can pull the credit bureau and know the credit worthiness of every person. So if I run a similar regression for lines of credit for other bureaucrats versus Shanghai, I should see my results for Shanghai go away. Because in Shanghai they actually have a credit bureau and this argument should go away. We actually don't see that. In fact, it is even higher. Okay? Now that could be because of a city effect. Because Shanghai is a big city, the bureaucrats have more demands and it's not purely an issue of corruption. But if I only run this regression for first tier Shanghai cities, I still find the same effect. So something is happening even in Shanghai, even in the big cities, or even when there is a credit bureau, but the bank actually feels they need to go out of their way to give this additional line of credit to the bureaucrats. Okay. There's one more regression we were trying to run is maybe there is something going on between the bureaucrats. The bureaucrats may have better relationships with the bank. They have other deposits or credit relationships with the bank, and that's why the bank does this. Or it could be that they're more sophisticated. So what we actually know if they work in finance industry, or if they are in econ types. So maybe our argument is that these guys are more sophisticated, understanding how banking works, and so the bank understands this, and so they go out and give them higher lines of credit. Actually, it's not true that if we control for everything else, that the bureaucrats actually who have banking relationship get lower lines of credit. Okay, so it's just not true that the bureaucrats with more sophistication or higher lines or more relationship gets higher lines of credit. There is no evidence of that in the data. So essentially, that's all I have in the paper. Let me just kind of summarize. What we find is that the bureaucrats from this bank get around 14% higher line of credit. They default by almost 100% higher rate. The bank goes out and then reinstates their line of credit and essentially wipes that clean. In return, the bureaucrat takes government money and puts it in that branch to kind of complete the quid pro quo. So there are social implications of it, because what is happening is that average guy who lives in that city ends up getting lower lines of credit because that money gets siphoned off to the bureaucrat. And so their ability to actually consume or start small businesses goes down. So it has implications, wider implications to the society, and it's not just that the bureaucrats actually benefit, and there's without any cost to the society. Clearly this is economically significant for us because we can show you that we can account for almost around 10% of the corruption in China just by this mechanism. The bigger point to me is it's not just a paper saying that, oh, I have a cool data, I've shown some regressions for you and that's the end of it. I can actually show you a mechanism for a regulator to go out and detect corruption across the banking system and say, I need to see your data, I will catch your corruption if you're doing so. Finally, I mean, for technical types, I actually had a very nice experiment of a crackdown. And I can show you that once the crackdown happens, all of my results kind of go away as predicted or expected that these crackdowns are the ones. So there is causal identification in showing you that these banks do it, and when they are, when for instance, if we actually have the central bank and say, okay, now I'm going to come in and check all your books, we'll actually see all of this go away. That's the implication of the result. That's it. Maybe I had finished earlier, but it's better finishing earlier.
So thank you. We are going to start off with a quick discussion. Thank you, Sumit. That was very, very interesting. So let me start off from the vantage point of where we are, which is India. And you know that India is in the middle of a huge banking crisis. So my first question would be, if I were to extrapolate your findings, does that mean the reason, and I'm really asking you to stretch your findings, but in India, because we have non-performing assets, largely because a lot of line of credit was extended, but clearly there wasn't a matching quid pro quo, so it's not like the banks benefited out of that. So this is a very different logic from the kind of corruption you're talking about in China. Is that correct?
We just don't have evidence. And then you're extrapolating and assuming that this mechanism doesn't happen or working. I don't know. I mean, I bet if we go to these banks and tell them, please show us your books and please specifically tell us if what the occupation is.
No, but I think where you have the difference here is that I think you have a regulator or you have a better regulator here than what you have in China. And that's probably the reason why it works in India.
There is an assumption you're making.
Actually, you substantiate what he's saying. Actually, when you're saying, the deposit of bureaucrats actually benefits the bank. Perhaps I would like to have a clarity on what is the practice being followed in China, because here I'm just giving you an example of what's happening in India. In India, you cannot go across, say for example, Standard Chartered Bank, ICICI Bank, Axis Bank. Government cannot go there. The bureaucrat, even if he has the capacity to take decisions, he will not go to this bank. He will go to the private, nationalized banks. Is it the same case in China also? Or across the bank, they are allowed to go and deposit? This is what actually I wanted to say.
So I didn't tell you which bank it is. Obviously, for obvious reasons, I will not divulge the name of the bank. It's one of the largest 5 biggest banks in the country. I have data from another bank in China where I find very similar evidence, actually stronger, from last 2 years. I truly believe these practices are happening. Unless you have data to convince me that this doesn't happen in India, but I bet now here is a mechanism I can tell you. I will walk into State Bank of India and tell them, hey, I work for this ministry, I need higher line of credit. It'll be very hard for the branch manager to tell me no. Okay? There is no mechanism at the branches here to do credit.
One second, I just wanted to clarify another thing. I think the scenario that you are explaining about China, perhaps we are unable to comprehend and know exactly how it is. But in India, I presume, because having seen, how the public sector banks function, actually they are more lethargic, they are more laid back as compared to private banks. Whereas the government regulation says that it is compulsorily, it's in the public sector bank, these government deposits to happen. Could you explain and correlate this to?
My story is not inconsistent with yours. I'm just saying in India, the private sector banks are a urban phenomenon. Okay, it's not a geographically dispersed, covering the whole country phenomenon. They're only there in big cities because that's where they see their revenue.
I'm asking you this because I would like to understand the comparison between the two practices there, what they have in China and what we have in India. Whether we have that comparison or not.
So let me just get in here. The perception that public sector banks are lethargic. In fact, which is currently, if you look at the NPAs, that is probably true in terms of the lines of credit that were extended, particularly in terms of infrastructure. But if you actually take the data back to last 20 years, then the performance is not that different. Because the private sector banks in the 90s and the early 2000s were having much larger NPAs than the public sector banks. So it really depends on what is that source of inefficiency that we are exploring. But going back to your hypothesis, Sumit, your finding is of extreme importance for India. But what we are trying to comprehend is that because we have a booming private sector bank and a separate public sector bank, and their essential mechanism or interaction with the government is very different. Would we expect different, your hypothesis
My
to go
argument, answer to
different.
that is still the same. My answer is, if I happen to look at the data of the public sector banks in India, I won't be surprised to find similar evidence. What you're saying is the trajectory of the private sector banks' growth in India is much higher, so even if you find that evidence in India, it's not a big issue because over time these guys will just diminish and not exist, so this corruption mechanism will go away. That's a fair argument. I'm not sure I buy the argument that the growth rate is so large that the public sector banks will disappear in India. They're a major part of Indian banking. The guy who was trying to reform is leaving. So I just don't see things happening where we'll see a lot of reform in the public sector banking. I mean, I have a lot of data for India, public sector and private sector. So if I come next year, I will show you guys some results of what
Maybe my clarification is simply to one question. There is a quid pro quo, which you read actually, why he is given more credit level is because he goes at the cost. I just wanted to know whether it is the same practice in China as we have here. Don't they have some kind of regulation where common deposits will have to happen only in government banks? That's
But
It's
there are
basically
several
like a
government
discussion.
sector banks. I mean, to his defense, or to the hypothesis, eventually the official has a discretion on whether to put it in public sector bank A or C.
That's what the
Because there are
government official is
multiple-
doing, it says at his discretion where to put that money. Okay, imagine you're building a dam. All that money has to come to you and you have to disperse it and store it somewhere at a bank before its salaries go up every month. Where will you do it? You will only do it when you actually know the loan officer, the branch manager. And you don't know him from, Adam, you know him because he does something for you. You say, okay, don't worry, I'll put my money in.
I have anecdotal evidence for that. I used to quote swaps to a lot of PSU companies and whatnot. And there were a lot of times when a bank would get the deal, whereas my quote would have been better.
That's within the public sector banks.
PSU banks don't have swaps, yes, so it would always be Indian private banks and foreign banks. And certain banks would get the deals because even when my quote would be better. And it happens all the time in banking.
Great. So now if we have any more questions, Ankit.
So with the Indian experience in terms of the local bureaucracy, like we found there are two issues. One is with the tenure uncertainty, where like the bureaucrats are shifted from one place or one position to another, very randomly. And second is about the centralized, that it is the decision making is not highly decentralized, especially at the local government. So how do you factor in these factors like in terms of your analysis? Especially for the municipalities which you mentioned like they are directly controlled. So they are more centralized as compared to the other areas.
No, but I think we are having a wrong discussion. Here is the reason the wrong discussion is wrong. I pointed out 4 or 5 mechanisms why the loan officer wants to give these lines of credit to the bureaucrat. One of them is very simply that in return he will get bank deposits. There are many other reasons. The other reasons could be that he dictates where the branch openings will happen. That may not also, you may argue that in India that just doesn't happen, he can't do it. There are other reasons. There is a revolving door. The branch manager may want to become a government official. So having him a close relationship with him or having him in his pocket may benefit. Now I've not thought through what are the localized reasons why the branch manager will do it, but I can always tell you there will be reasons for a branch manager why he wants to give bribes to the government official. I mean, it shouldn't be hard for anybody to believe that in India you want to bribe government officials.
Anybody else? So why disguised?
Here is the anecdotal story. This is what I was talking to one of the government official in China, and he told me that here is another way corruption happens. So a government official, he's pretty high up. His wife has a very nice art gallery where she makes her own art. Okay? So the businessman will go and buy the art, and the price of an art is in the eye of the beholder. He will go buy the art and say 10 times the price. Then he will take that art and go and gift it to the husband. The husband will give it to the wife and she'll hang it back up there. So now that's another way of doing corruption. But here, Why is this better for the bank? Because you can never get caught. Okay, here let's say the regulators come and say you gave more lines. Yes, because I believe they deserve more lines. But if you believe they deserve more line, why did they default more? That's ex post. I don't know what is happening in their life. Maybe they get lots of negative shocks in their life. All these bureaucrats get shocks. I am not out there to manage ex post shocks. I'm just there to do ex ante risk management. So I gave them, based on their future income, potential income, reliability of their job, I gave them lines of credit. Now they defaulted, that's not my problem. Why did you reinstate them? Because I'm a government bank, I'm worried about my books. Why did the government official now put their deposits? No, go ask them, that's not my problem. So I can always cook up a story as the guy to explain to the regulator why I did that, and the regulator cannot pin me down that this is corruption. When I do this art deal, eventually I can get caught.
So have you been keeping pace with the RBI?
I was just there 2 days ago.
So some of the regulations that Raghu has been trying to push, which is for opening the books of banks to expose some of the non-performing assets. You think that fits into your definition of a crackdown?
Essentially, yes. Obviously, all these big shots were not very happy. By him getting independent regulators to figure out what is happening to their credit ratings and figure out and get these independent reviews, these guys knew that this will affect their ability to get access credit. And they were clearly not happy with that view that even though I think the government understood that is the right thing to do, that we should actually have an independent review of the corporate ratings at the public sector banks. It's exactly the kind of argument that this crackdown. The crackdown is more general in China because it's one party, one banking system. But here, I think that's the balance.
Have you kept pace with the bailout that has happened recently in terms of some of the PSUs,
The write-offs.
PSBs, yes, the write-offs that have happened? What do you think of the write-off? While they might be very minuscule in terms of the NPA sizes that exist, do you think that's going to lead to just a further moral hazard problem, or is that the right way to approach this problem?
I mean, as an academic, I clearly think moral hazard is an issue in these kind of policies. From a practical point of view, I mean, I'm a guy who's not an academic all his life. I mean, I spent 6 years in Bank of America. Then I spent 6 years at the Fed. So I have seen all sides of banking. And in practical terms, we do that. I mean, US gave out HAMP money, HARP money. All these programs that the US government had essentially were nothing but bailouts for either banks, for the bad borrowers, or some bad part in the economy. Now, you may argue, why are we doing this? Why aren't we learning from basic economics that this creates moral hazard problems? Moral hazard is cute in books and in academic circles, but in real life, when you have a serious problem, you need to take care of it. And governments have to step in once in a while and address these kind of issues, and we'll worry about moral hazard.
That is moral hazard. We have one question.
You have offered very interesting insight into the way the corruption can take place. Can you offer some comment, in case you have examined it, as to any comparison between the corruption regime, the way it takes place in China, and the way we look at it in India?
That's too big of a question for me, but let me try.
Maybe you can narrow it down to the sector that you have been working in, but still a slight comparison.
So, I think the kind of corruption that I have in mind is pervasive in both the countries. The way I have heard from Chinese officials, in China for most part, it's a one-stop shop. You go to one government official in a province and you bribe him and he takes care of pretty much things up and down the road in the government or ministry. In India, I think that's not true. It's much more pervasive and it's the kind of much more at every level. So you can't just bribe the minister because within the ministry he tells you that, everybody has a account. So you have to kind of pay. So I think so this argument is much more apt for India than even for China. In China it's showing banking, but I think I remember this story. I used to live in Hyderabad, and one day I was driving my car illegally because I didn't have a driving license on that day, and one of the cops caught me, and he said, "Wow, you don't have a license," so I gave him 1,000 rupees. So he was very happy. So I went to my friend's house, who was just living like around the corner, very rich businessman. I was telling him, like, how come I'm in your neighborhood, okay, and a cop took like 1,000 rupees from me. So he called his driver, he said, go to that cop and bring his 1,000 rupees back. I thought he was joking, but he actually brought my 1,000 rupees back. Because the guy was telling me, that guy is on a monthly salary with me. Okay? I give him a monthly fixed corruption wage. So if you are my friend, he can't just take extra money from you. Otherwise, I'll have to cut it from his wage.
How did he catch you in the first place?
I was making a turn which I shouldn't have been. He caught me, and then he didn't catch me for the turn, he caught me for the license. So, legitimately, I was just joking with this guy, will I get my 1,000 here? And I knew he got my 1,000 because there were sequential notes. So I knew exactly I got my money back.
But just to expand to your question, to answer in fact broadly, there is a huge literature on corruption talking about centralized versus decentralized corruption. That is it more efficient to have centralized where you pay one person or one point, one window, and essentially everything gets smoothed, or do you then pay at different checkpoints?
I had slightly different in my mind when I asked it, maybe I'll rephrase. You spoke about crackdown on corruption, whether when regime change happens. Has your study also examined any further whether these crackdowns are taken to their logical conclusion, and if yes, what kind of punishments are given? And because there lies the main problem.
I think there is an inherent flaw in your question. You really think these crackdowns are meant to do good?
Maybe not, maybe not.
Now, these crackdowns are just there because of the regime change. And now the money was going to somebody who you didn't think should be going to, and you want your fair share of the cut. So when you say it's a crackdown, it's not a crackdown. You're just saying, let's get rid of these guys.
There's no system cleansing in that sense.
It's just reorganization of who the bribe should go to. It's like when, UP government state, there are prime minister changes. You have to now start paying bribes to these different guys.
And here, what you're able to show is that when there is a crackdown, not only do the lines of credit come down, but also the quid pro quo come down. To me, that's an improvement. I mean, that is what a crackdown, whatever the intent, is meant to achieve. So I don't know whether it is deliberate or, as a
Well, this was
chance,
just
but
purely, I don't think that the crackdown was out there to catch them.
much.
So would you say if we go to like 100% electronic money country, would your method be more effective, or would there be other ways to handle corruption or make corruption?
Wouldn't you argue it will be more so? Because this is all electronic stuff.
Yeah, exactly. So I'm saying your method might be able to detect more corruption, or there might be other ways to do it.
I mean, the problem with that argument is most of the countries that are moving in that direction are fairly clean. Majority of the corruption still happens in cash. But banks obviously can't give out cash. Eventually they get caught up. So they have to do these kind of things. But most of the industry corruption to pay off the bureaucrats and politicians is mostly cash, so nobody can trace it.
So we are going to catch it.
Different debate.
Do you have any more questions?
So you said that in the crackdown, the corruption shifted from a group of people to different group of people. So why did the credit line go down?
Oh, no. So the different arguments. That's a broader argument I'm making, why crackdowns happen. But in the data, I'm showing you that crackdown happened, then as a result, lines of credit went down. But the argument I'm making in general that crackdowns are not actually welfare improving in the long term, they're just redistribution of who gets. But what I would show you that if I could drag this data out for 5 years, after the crackdown, it just will go back up. That's what I'm saying.
Great. So, is that it? Okay, thank you very much. Thank you all.